Hey guys, Aevs here from Riptide Crypto and welcome to another stream. I've recently decided to put together a bit of a tutorial series on how our indicators work, um, how they're designed, what they do, and what to look for in each one, and how to avoid catching the market and getting wrecked. So let's just jump straight into it. What I've done is I've loaded up a BTC chart here with two indicators currently active. The first one you see up top that looks like Bollingers is just called Volatility Bands, and we're going to get into those in a second. The next one down is one called Current. Now this is an indicator that I built roughly over the period of about 3 years. And what it's been designed to do is help you catch market bottoms at their absolute extremes. So what we're going to do is I've loaded up the RSI, which is the most common indicator for evaluating overbought or oversold conditions. What I'll do is I'll be lenient and change these to 20 and 80. Just so that we're being fair to the RSI, we can actually see when it crosses up and down and how most traders would actually use it, and how current is different to how the RSI works. So, the most recent drop on BTC, which I've got loaded up here, apart from that one, the big one, which is about, just take it from the top there, which is, yeah, good, $1,500 drop. Um, and what that we actually shorted, and then I longed at the bottom here was basically built off two things. So the first one was is looking at current. When the move started happening, the current's not telling me much. Right now, you see three lines up here. You're confused, don't know what it means. It doesn't make a lot of sense. That's okay. So the way that it works is the three lines. We're looking for periods of confluence. Now, what I mean by that is we're looking for periods here where we're hitting the absolute upper regions, where all three lines are within that region, right on top of each other. We're not going to play anything in here. This doesn't mean much to me. This is market noise. But these regions give me a lot of insight as to when to go against the current dominating trend. Now, what I mean by that is you can clearly see that BTC formed a strong downtrend. It sort of continued, and then bang, we had this big drop. And how do you know when to long? Did you long up here and got wrecked by another $500 drop? No. You wanted to know exactly where the market bottom is, and that is what current has been designed to do. Now, looking at the RSI does call it down here. Playing by the traditional RSI rules, we would wait for a cross over 20, which happens right. Yep, right on this candle, right? So the RSI does actually help us catch right here. Very well done. It's fair enough, and it actually helps us. No, the first signal is actually a fake one before we continue to drop another $200. So here it does kind of, it's a bit of an interpretation, but when the market's moving, things are really hectic. You don't know when to enter. You'd probably enter on that first cross and be down another $200, which eventually recovered, which is okay, but we really don't want to be sitting in those drawdowns and taking that much risk. So, how does current work? Current actually just measures market volatility over a period of time. Right now I'm sitting on the 15 minute, and we're going to get into some more examples on higher time frames as to how it's used. It's just applicable to all time frames, works across cryptocurrency, stocks, forex, etc. So you can apply it wherever, but let's use BTC, which is our dominant trading strategy at Riptide Crypto for leverage, and get into it. So the first one that I notice here is that the RSI calls the bottom here, and so does current. And the RSI calls the bottom here, and so does current. Now what current actually did was it called it on the red candle up here. So what we're looking for is the minute this little green line crossed up and got confluence, we would wait for the candle close. We wouldn't do it the minute it crosses up. This is 15 minutes. We'd wait the full 15 minutes, wait for the candle to close, and I could actually put that in replay mode and just show you what that would have looked like. There's the big drop. And what we're seeing now is, I'm just going to zoom in here. all three of these lines have now crossed up into current. They are sitting within confluence of each other. I generally prefer uh, the the readings to be over 0.95, irrespective of all three. So I wouldn't trade this one. This one, green, is still too low, but right here I can see on candle close, it's a good time to enter. And what happens straight after is that BTC jumps straight back up. So very quickly, because we're going against a trend, we're not looking to uh, what's the best way to put it? We're not looking to absolutely catch the absolute market bottom. We are looking for a short term but highly profitable trade as BTC retraces from being completely oversold. So if we just take that as an example, immediately, let's be generous. We got a 4.2 and the 10x leverage. That's a 42% trade. Absolutely beautiful, and all within 15 minutes. Now, what most people struggle with the RSI is they would wait for it to sort of reach all the way up here to be oversold, very loose term, before they'd actually exit. Now, the reason I've loaded up the volatility bands is to actually show you how we use those in two different scenarios. The first one is entering the short when we start to break down away from it. And you can see that trend continues and just continues to reject off the top of what we call the central zone, or the CZ. And what actually happens is, if we just play this out, you'll see that BTC begins to lose strength, enters the CZ, speed that up a little, and then eventually starts to lose its strength again. Now, where I actually would have exited this trade was the minute we re-entered the volatility bands. If I just come in here, just turn this off, just turn off that central zone for just 1 second. I still have the mean in there. That's not going to work for us. It's going to be confusing. Where I would have exited this trade, and where I did exit this trade exactly, was when we reached back to this red mean. So the baseline for the short-term trend coming down, the minute we hit the bottom and we retraced back, that was my exit, because all that was implied both on the bands and on current was that mean reversion was active. So what I was waiting for was it just to come back to the short-term band, the mean of that band, and then exit the strategy accordingly. Now, I wouldn't short here either, because what I'm just doing is I'm just taking my profit, I'm putting my risk profile at play and saying this is my trading plan. Based on current, I can enter when this candle closes, I make that profit, I then hold throughout that. Now, with the RSI, it's nowhere near oversold yet. And what actually ends up happening is, even if you did take that trade, eventually you ended up getting wrecked as BTC just went sideways, 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 and then continued its eventual drop. But we're not gonna, we won't sit here watching all of that. You guys can replay that on any chart. And I'm just gonna turn back on that CZ because it is so important to what we are discussing today. Now what you can see is it's just within this containment zone, and look, this is something we can get into on lower time frames. But to me, this just means that there's absolutely no differentiation in trend. BTC hasn't necessarily established a new trend. It's just going to be moving up and down. It's just going to be a little bit sideways and chaotic for a while. And we do eventually get that other drop right at the back of this. There we go. So the minute that we start noticing this, is the first thing is we do break up here. It will reject at the top there. There's a couple of rules that govern this, and I do go into more detail on them as part of the tutorials for our subscribed users. And it rejects off the bottom here as well, right? It's a fairly straight and even play here. BTC is just what the best that I could describe it is. It's too fat. It's too heavy to move. The market just saw so much volatility. There is just no way that we're going to be able to make price move efficiently as traders are reeling in the market. Everyone's trying to figure out, okay, well, where does BTC want to go? What's it going to do? So playing within these ranges is absolutely fine, but it does mean that we should probably drop down to a lower time frame. Now, the next thing that happens is when BTC has this eventual drop, we do actually wick all the way back into it, and then it kind of just gets chaotic down here. But what we did was this. I did actually call it on the group just to watch for the break of the CZ, because what we'd done is we'd become thin enough. Current had reset behind the zero point 0.3 line, and this is really, really important. So there's two things that it measures. One is the oversold region. The next one is our ability to move and when we can actually expect a larger move. So what ends up happening is just before this large move, current just moves under the zero point 0.3 line, which means that the minute it crosses back over, we have trend and a gear shift starting to take place, and BTC is going to start moving more in a more volatile way. It's going to decide which way it wants to go, and it has the ability to do so. Now the RSI again doesn't really tell me that. Right now it's not oversold, it's not overbought. If you're using the 30, yep, sure, we're in an oversold territory and you can start using that. But look, if we were using the 30 earlier on, you would have gotten absolutely wrecked up on this trade, because you would have entered roughly before the big drop actually happened. So continuing on, I'm just going to close off the replay here because that's no longer necessary. What we do get is we get very clean definition of trend. We get a very clean definition of trend just happening up here, and you can see that does continue all the way down. And then what happens here is current doesn't tell me much. It's not going to tell me when it's going to reverse, but because of the rules of the bands, I can assume that at some point when this starts to end, that we will have that active mean reversion that I spoke about earlier, and it completes here when it finally makes this move up. So the best way that I actually trade this, and I'm not trying to be I'm not trying to say this is the best indicator on the market that it's going to make you millions of dollars. I'm just trying to give you a view into how you can look above volatility when BTC does begin to make a move, and how to decide. The problem is most retail traders, when the road's going right, they want to turn left, and when the road's going left, they try and turn right. They try and long into a short trend. They try and short into a long trend. They're always trying to catch the bottom or the top. Now, the way that I just play this is once it actually breaks, I would wait for these candles sort of, especially this one, I would wait for it to just settle down, because once it breaks, there's generally a lot of volatility around that zone before it finally does start to move. So once it started to move and I can see that happening, when BTC hits these ranges, I will move my stop loss into, well, that's profit. And where are we? I'm just going to recolor this so it's just a little easier to see. I will move my stop loss into profit. The minute we make our next leg down, stop loss into profit. And the minute we make that next leg down, I would move my stop loss into profit, so on and so forth, right? So the final one where I did actually get kicked off was right about here. I think that wick just came up and took me out. That's absolutely fine. I still made a very decent, I think I just shorted just behind that. I still made a very decent 4.10%, which is a 41% trade. For again, an average of about 3 or 4 hours, it's really not a bad day. I do this for full-time living, so it is, I do need these moves to happen every once in a while to actually pay my bills. But anyway, continuing on, the next thing we can notice is, with the volatility bands, when current's really in these sideways markets, it's really not going to be doing much. You can see it sort of flip-flopping, but notice that the red macro trend, which is our most important line, never actually moves below 0.3 right up until this point where we do have a final pump up. Now, what we can also observe is that the red short-term bands are just sitting inside of the central zone, and then we can assume that price will contain within those until we have a proper breakout. Now, here, there is no way we're going up. The bands are too fat. We can basically short the top of the red, we can long the bottom of the red, short the top of the red, long the bottom of the red, etc, etc. And you do see this little wick come out, but it just breaks straight back in, and this is just because current is telling us that there is no way that we're actually going to trend down. So it's a very easy trade, very straightforward. You don't have to overthink it. It's right there. Put a stop loss in place. If it does wick you out, great. That's absolutely part of trading, but at the end of the day, these are high probability trades that succeed time after time after time. Around 89%, I would put my own stats at. And then finally, when we do move down, we do have this violent move up. We do see current two indicators here actually do top out, but the bottom one, it's basically just saying, great, I've just completely reset. We can finally start moving in whichever direction again. And we do have a fairly decent sized $200 move up here. I didn't play this, I think I was asleep, but a couple of guys in the group did. And then finally, we see that trend continuation as it's just bouncing on the top of the CZ, weakening, and then eventually when we have compression, BTC breaks back down, and we have that mean reversion taking place for this is what I'd call a full mean reversion because it's reverted back to the mean of the CZ, not just the short-term bands, and we do expect that from time to time as well. So those are the volatility bands. That is how current works. Look, before I finish off just this quick tutorial, because I just wanted to keep it really short, let's just use stock just for a second, just so you can see that I'm not just bullshitting you on some random as time period that I picked that makes it look really good. So if we look at the Dow as an example, so on the 15-minute, it doesn't really work on the Dow. I'll be honest, just because of the way that the stock markets and the indexes actually work in their intraday trading, as well as having specific trade windows that they operate within. You can see how the volatility bands actually play within the stock market, and that when certain things happen and we hit that red, a lot of traders would have been longing this at the start of the day, but you can actually see that it is already topped out. So you can actually bet on the inverse to happen for it to sort of move back to that mean, which it does. And then we eventually have trend that actually happens here, and that just sort of continues, and you can keep that long open right up until the point we break back in. Or, as I mentioned earlier, have a trailing stop loss that I suggest you manually set, because this arbitrary static trailing stop loss of $100 will get worked out at some point. But look, talking about indexes and stocks and so on, the one day is probably where things really do shine, and that is really interesting. Let's just get a better version of that. I don't want I'll use the EDI on the stock exchange. That's absolutely fine. So the next thing we're looking at, remember, we're looking for those periods of confluence where we do see all of them absolutely line up. And the first one we have is right up here. There's Exhibit A. That is not, no, orange doesn't actually match that. And then we start to see it up here as well. Now the next thing to notice is the longer we stay up in this red position, the bigger the move down is going to be. So think about it as an elastic band that just remains stretched and stretched and stretched, and when we eventually hit that zone of being overstretched for too long, we are going to have a fairly gigantic move down. And we can see that with this trend that just continues up and up and up. Has a small visit here back to the mean, but then it just kind of continues. We do have this eventual massive reset as the market's just not able to keep up with that expansion for too long. There are some really decent examples throughout here that I've seen in the past. There's the bottom for you if you wanted to long it at the bottom, and there's another top. So look, these the thing with current is you can't force trades. It isn't one of those magical indicators. It's just going to give you like 17 trades a day. It does take a little bit of zooming in and out of different time frames. I always suggest you start at the very top, the one day, and you make your way down through each different time frame to actually see what's going on in the full picture. So if you can see that we have a strong uptrend on the daily, don't go shorting on the 5-minute arbitrarily, because you probably will get wrecked. So you probably want to be looking for more longs in the 5-minute than you would looking for shorts, because we know that we're in a very strong uptrend and that price may be likely to move against you very quickly in the short term. So look, that is I think I'm going to cut it there. I'm just watching the time. Thank you for joining us today. This is how volatility bands work and current. And just before I go, I will say that I have recently updated current to actually be a little bit more to give you a little bit more insight into the market in depth, it's actually been made directional, so you can actually see, in which direction we are moving and what these red dots mean. So what's really interesting here is the red dot here just implies that we're in for a massive drop just before it happens. It is future looking. It will actually start telling you what to look for at different time periods, and we're going to get into that in our next video. But for now, thank you so much for tuning in. I hope you guys are staying safe and having really good trades, and I will chat to you later.